Welcome aboard where curiosity fuels our journey through the universe of knowledge. I will be your captain on this adventure. Here on this channel, we explore subjects such as finance, where we talk about stocks, business, and tips for spending and saving money, turning info into action to achieve our personal goals in life. Today, we're exploring the investment realm of DXYZ. We'll be exploring what it is and what the pros and cons of it are. However, heads up, this is for education, not financial advice. Your decisions are yours when it comes to investments. If you love learning and making informed decisions, stick around. These videos take hours to create, so if you find value here, please like, comment, and subscribe. It keeps the ship flying. Now, let's blast off into DXYZ and see what it's all about. Here are some quick points about DXYZ. DXYZ is the stock symbol for Destiny Tech 100 Inc., a closed-end fund on the NYSE, investing in private tech companies. It offers exposure to firms like SpaceX and OpenAI, with a goal of offering exposure of up to 100 companies. DXYZ currently holds 22 out of the 100 companies in the fund as of September 30th, 2024. The evidence leans toward it being a high-risk investment due to volatility and trading at premiums or discounts to its net asset value. So, what exactly is DXYZ? DXYZ is the stock symbol for Destiny Tech 100 Inc., a closed-end fund listed on the New York Stock Exchange, NYSE. This fund aims to invest in a portfolio of private technology companies, providing investors with access to high-growth, privately held firms that are typically hard to invest in directly. It uses a flexible approach, investing in various securities like equity and equity-linked options through both primary and secondary markets. What is DXYZ's investment strategy and holdings? Destiny Tech 100 Inc. targets 100 top venture-backed private tech companies, with a current portfolio of 22 companies as of September 30th, 2024. Notable holdings include SpaceX, Epic Games, Discord, Revolut, Stripe, and OpenAI. The fund focuses on large and medium-cap companies with high growth potential, considering factors like market size, growth rates, and cultural health metrics. What are some risks and considerations to take into account when considering DXYZ as an investment? As a closed-end fund, DXYZ's share price can differ from the value of its underlying assets, potentially trading at a premium or discount. Investing in private companies involves risks like lack of liquidity and significant price volatility, which investors should carefully consider. What is a closed-end fund? A closed-end fund, CEF, is a type of investment company that pools money from multiple investors to purchase a portfolio of securities, such as stocks, bonds, or other assets. Unlike open-end funds, like mutual funds, which continuously issue new shares or redeem existing ones based on investor demand. A closed-end fund issues a fixed number of shares through an initial public offering, IPO. After the IPO, these shares are traded on stock exchanges, much like individual stocks, and their prices are determined by market supply and demand, rather than the fund's underlying asset value. Why is it considered risky for investors? Closed-end funds come with certain risks that can make them a more volatile or uncertain investment compared to other options. Here's why: price volatility, discounts, and premiums. Since CEF shares trade on exchanges, their market price can differ from the net asset value, NAV, the actual value of the fund's underlying assets. This means shares might trade at a premium, above NAV, or a discount, below NAV. For example, if demand is high, you might overpay for shares relative to the asset's worth. If demand drops, the share price could fall below NAV, leading to losses even if the underlying portfolio performs well. This disconnect between market price and NAV introduces extra volatility and unpredictability. Use of leverage. Many closed-end funds borrow money, use leverage, to increase their investment capacity and potentially boost returns. While this can amplify gains when the market performs well, it also magnifies losses during downturns, making the fund riskier than non-leveraged investments. Illiquid investments. CEFs often invest in less liquid assets, such as private companies, real estate, or specialized securities, which can be harder to sell quickly. This illiquidity can result in wider bid-ask spreads, the difference between buying and selling prices, increasing transaction costs, potential difficulty maintaining value during market stress, which could hurt returns. Higher fees. Closed-end funds typically charge higher management fees compared to other investment vehicles like mutual funds or ETFs. These fees can eat into your returns over time, reducing the overall profitability of the investment. Summary. In essence, a closed-end fund offers a way to invest in a diversified portfolio with a fixed share structure traded on exchanges. However, its risks, stemming from price volatility, leverage, illiquid holdings, and higher costs, can make it a riskier choice for investors compared to more straightforward options like mutual funds or index funds. These factors mean that while CEFs can offer unique opportunities, they require careful consideration of their potential downsides. Next, a detailed analysis of DXYZ. This section provides a comprehensive overview of DXYZ. The information is sourced from financial websites, the company's official pages, and analytical reports. Background and definition. DXYZ is identified as the stock symbol for Destiny Tech 100 Inc., a closed-end management investment company registered under the 1940 Act, listed on the NYSE. It began trading on March 26, 2024, offering investors a unique opportunity to participate in the growth of leading private technology companies. Unlike open-end funds, closed-end funds like DXYZ have a fixed number of shares that trade on the stock exchange, with prices determined by market supply and demand, which may not always align with the net asset value, NAV, of its holdings. The fund's mission is to democratize access to private market leaders, previously available only to a select few, by allowing investors to buy shares through their brokerage accounts, regardless of net worth or income. This is particularly significant given the growing $4.5 trillion unicorn market, where companies are staying private longer and achieving substantial growth. What is DXYZ's investment strategy? Destiny Tech 100 Inc. employs a structure-agnostic approach to portfolio construction, participating in both primary rounds driven by the company and secondary purchases from existing shareholders. This flexibility allows investment in multiple classes of equity, equity-linked, and equity-related securities. The strategy focuses on company selection criteria. DXYZ targets large-cap companies with $10 billion plus valuations and medium-cap companies with $750 million to $10 billion valuations for stability and growth. Companies must have a large total addressable market size, or TAM, high market growth rate, high company growth rate, and asset-light, software, platform-based business models with network effects or economies of scale. What is DXYZ's cultural and financial metrics? DXYZ considers health diversity metrics, culture and employee reviews, strength of vision, transaction structure, class of stock, transparency of financial disclosures, and recent historical secondary market pricing. For example, Forge, NASDAQ, Zanbato. How is DXYZ governed? An investment committee determines inclusion, pricing, and weighting, with an independent valuation committee overseeing fair value. Companies not meeting criteria are excluded by default, requiring board approval for inclusion. The annual management fee is set at 2.5%, with additional fees possible through investments in special purpose vehicles, SPVs, which may involve concentration risks, liquidity, exit risks, and regulatory compliance risks. All right, let's close out this presentation on DXYZ. Whether you're already invested, thinking about jumping in, or considering it for the long haul, here's what you also need to know to make an informed decision. The big picture. DXYZ is exciting. It's a closed-end fund offering access to private tech giants like SpaceX and OpenAI, companies that could shape the future. But it's not your typical investment. Its share price trades on the stock market, often far above the actual value of its holdings, called the net asset value, or NAV. Right now, it's at a staggering premium, over 400% above NAV. That's a huge risk factor you can't ignore. So, let's break it down for each group. for those already invested. If you're already in DXYZ, you're in for a wild ride. Here's what to do. Stay vigilant. This fund is volatile. Its price can swing hard, and the premium could shrink or grow depending on market sentiment. Watch the holdings. For those considering investing, thinking about jumping in? Proceed with caution. Here's why. High premium, high risk. You're buying at a price way above what the fund's assets are worth. If that premium collapses, you could lose money, even if the underlying companies do well. Speculative nature. Private companies are hard to value and harder to sell. This isn't a quick flip. It's a gamble on unproven growth. Only risk what you can lose. If you're tempted, keep your investment small and treat it like a lottery ticket. This isn't a safe bet for your life savings, for those eyeing the long run. If you're in it for the long haul, DXYZ could be intriguing, but it's still a gamble. Consider this, potential payoff. If companies like OpenAI or SpaceX explode in value, you might see big returns years down the line. Illiquidity trade-off. You're locking your money up for a while. This is a marathon, not a sprint. Think years, not months. Dilution risk. The fund plans to issue more shares. That could water down your stake, though it might also bring in cash for new investments. It's a double-edged sword. Final words of advice. DXYZ isn't for everyone. It's a high-risk, high-reward play that demands caution and research. Here's my closing takeaway. Do your homework. Dig into the fund's structure, its holdings, and that premium. Knowledge is your best defense. Talk to an advisor. This isn't a simple stock or ETF. Get a second opinion from a pro to see if it fits your goals. Match your risk tolerance. If you're okay with volatility and potential losses for a shot at big gains, it might be worth a look. If not, steer clear. So, there you have it. DXYZ offers a rare chance to invest in private tech giants, but it comes with serious risks: overvaluation, illiquidity, and uncertainty. Whether you're in, considering it, or planning long-term, stay curious, stay informed, and make the call that's right for you. Thanks for watching. See you in the next one.